level, so a whole new swing can take off from that specific level. All right. You want to mark only the previous swing high, alright? The previous swing high there, meaning that you wouldn't really go drawing this one, okay? And waiting for price to retrace all the way back down there, okay? Searching for bounces off that area. Again, only the previous swing high. Obviously, this is the previous swing, and that's the previous swing high. So for the new swing, you would mark a horizontal line. I repeat, a horizontal line of the previous swing high, and if it comes in line somewhere around the dynamic area of support and resistance, again, that's a good sign. That usually is a good indication that the swings are rather harmonic, okay? And again, you know, that's usually a good indication that the trend is moving in a rather healthy pattern, alright? So draw horizontal lines of the previous swing high, again, in the case of an uptrend. In the case of an uptrend, of a downtrend, you will draw a horizontal line of the previous swing low, and then wait for pullbacks, okay? Wait for pullbacks to see if we can get a bounce of that previous swing high. That's the ideal situation, okay? Just as we search for bounces of trend lines, okay, on off a Fibonacci retracement, 38, 50, 61 Fibonacci, well, we also look to get bounces of the previous swing high and low. And obviously, the more of those different elements of individual elements of support and resistance, the more of them that come together around the dynamic area of support and resistance, the stronger the confluence will be, and therefore any bounce we may get off that level, well, the higher the chances that that's going to be the very beginning of a whole new swing, and therefore the higher the chances that we'll be able to squeeze some nice profits out of that level. Out of that next upcoming move. Okay. Okay, here we are back at our former example. Let me actually take off the Fibonacci retracements. Just a second. I'll try to delete that off my chart. There we are. So this is the current swing, this is obviously the previous swing, okay? And therefore I am to mark the previous swing high, extend that, or actually project a horizontal line of the swing high, okay? And basically the idea is that by the time price comes back down, the moving averages should have caught up with that level, and therefore you want to see the dynamic area coming in line with the previous swing high by the time the retracement has taken place. And therefore you want to see, or ideally you would see, a bounce of this area. Again, of the dynamic area of support and resistance, of the previous swing high, okay? Remember that we also had the Fibonacci retracements somewhere in this area as well, so, you know, that would be a nice confluence of different elements of, well, support, and therefore any bounce we may get off that area would probably give out a very nice, you know, a very profitable buy opportunity there, okay? Okay, let me now show you another example. This time around, a downtrend. We've already seen this chart before. It's the sterling pound against the American dollar, 30 minutes time frame. This is obviously the latest swing. Now we are going through the pullback aspect of this swing, and of course we are to mark the previous swing's low. The low point, the previous swing's low, since we are in a downtrend, okay? We are not marking the swing high now, guys. We are now in a downtrend, therefore we are only interested in the previous swing's low. Now, we have two swings low here, that one and that one, right? This one being a little bit lower than this one. Since this is the lowest point for the previous swing, this is the one where, you know, this is the one we are gonna be basing our horizontal line around. Now, we can see how that horizontal line is just above the dynamic area of support and resistance. That means that if price is to retest that horizontal line, it should breach the dynamic area of support and resistance. Now, that's alright as long as the breakout is something like this, okay? Just a temporary breakout, you know, price stabbing or breaching through the dynamic area of support and resistance very briefly so, okay? So if we see that price breaks above, slaps the previous swing low, and immediately after it turns around, that's still okay. However, if we see that price gives us multiple bar closes above the dynamic area and above that line, then this whole trend is, you know, at least is weakening down, and well, we will not be searching for short opportunities any longer. All right. So even though this level is just above the dynamic area of support and resistance, that's still okay. All right. Well, okay, now, we've already gone through all 4 different elements of support and resistance we are going to use in order to search for confluences around the dynamic area. Now, obviously, the markets are not perfect. We cannot always expect all 4 to come in line, okay? That would be, well, asking for way too much, I'm afraid. The markets are usually not that nice. But as long as you can get 1 or 2, alright, 1 or 2 around the dynamic area, it's usually good enough to search for our trading opportunities as we begin seeing, or as we begin getting that that bounce of the dynamic area. Again, if we have 1 or 2 out of these 4 different elements around the dynamic area, as price begins to turn around and begins to take off for what it may happen to be a whole new swing in the direction of the trend. Again, as long as you have 1 or 2 of those different elements, you have the green lights to trigger or to search for any buy opportunity as the bounce begins to take place. Okay? Again, the more the merrier, but as long as you have 1 or 2 around the dynamic area of support and resistance, and as long as you do get that bounce, that's still good enough to to trigger your entries. Alright, now, I'll tell you what, I'm gonna go through some actual examples, some actual trading opportunities myself, and I'm going to be drawing my own confluences of support and resistance. Just so next time you you sit at your trading station, you know how to do it yourself. Okay, so I'm gonna present some real charts, and I'm gonna be drawing my trend lines, my Fibonacci's, my counter trend lines, etc., etc. Again, just so you know how to do it next time you do it, or you have to do it by yourself. Alright? Okay, we are looking into the sterling pound against the Canadian dollar, weekly time frame. Nice downtrend, isn't it? Also, the trend filter indicator is calling a downtrend on the weekly, okay, which is exactly this time frame. So, certainly we are looking into a downtrending price action. Let's draw some trend lines here. We have 2 clear swing points, swing highs there, okay? So we can link them up in a straight line, all right? There it goes. Well, this trend line is a little bit far too high for my taste. Okay, please mind that the dynamic area of support and resistance is down here, and this trend line goes somewhere in between the 50 and the 100, a little bit too far up high for my taste. Let me zoom out, see if I can find another trend line. We have another clear swing high there, and this one. So I am going to mark that one. Let's see where that trend line goes. Wow, way too high. Okay, it even goes beyond the projection of the 100 simple moving average. I'm not interested in that one. Okay, so I can easily delete it, and that's about it. Those are the 2 most obvious swing points, swing highs in this trend. So that's the only trend line I can keep. Let me zoom in once again. Now, what about counter trend lines? As you know, in a downtrend, counter trend lines, we form counter trend lines by linking swing lows. So those are the 2 most obvious swing lows there. So we can link them up. Let's do that just in a second. There we are. Oh, well, as you can see, price already reacted off a counter trend line. Okay, do you see how counter trend lines are just as profitable or just as powerful as trend lines themselves? Okay, do you see how we got a valid move up on a bounce of a counter trend line? However, this bounce didn't quite happen anywhere within the dynamic area, so that's not a trading opportunity I would feel comfortable taking. Okay, it was indeed a profitable trading opportunity, but just too far away from the optimal area, okay, and therefore I wouldn't have felt comfortable taking that trade or that bounce there. Alright, so that's not a bounce I would be interested in taking. Let me actually zoom out, see if I can find no, nowhere near, no other two counter trend lines. This one is certainly broken already, so yeah, only that one there. So no counter trend line that I can use on this specific chart. Okay, now what about Fibonacci retracements? Well, we have one swing here, we have another swing here, and we have the latest swing there. So this is the high for the swing, that's the low for the swing. I am to draw to take my Fibonacci retracement tool and link those 2 swing points. Well, if this is indeed the lowest point of this swing, we can see how the dynamic area of support and resistance as we project the moving averages falls in line, okay, within the 38 and the 61% Fibonacci retracement. So that's a good sign, okay, that's a good sign. Obviously, if price doesn't quite retrace from this point on, meaning that this is indeed not the low point for this swing, and we find that price keeps on pushing down, I will simply need to keep on readjusting my Fibonacci's until we do indeed find the low for this swing and price begins to retrace up. As it stands right now, well, so far so good as far as the Fibonacci's, okay, the moving averages, by the time we get a pullback, should be in between the 38 and the 61 Fibonacci retracement, so that's a good thing. I am liking that. Okay, now finally, what about swing lows, swing highs or swing lows? Obviously swing lows, since we are in a downtrend. Well, we are to take the lowest point of the previous swing. This is the previous swing, right? This is the current swing. This is the previous swing, right? So we are to take the low for that previous swing, and we are to extend a horizontal line of that level. There it goes. I'm gonna mark this one. I don't know, what's your favorite color, guys? Let's say a green, for example. Alright, there we are. So green color there, and well, we can also see how, as we project the moving averages, also this previous swing low, or rather the extension of that previous swing low, is falling in line with the Fibonacci retracements and the dynamic area of support and resistance. So, moral of the story, around this level 162 below, somewhere in there. Actually, let me give you the exact level: 162.40, 162.30. Around this, whoops, let me just click on around this area, right? Again, 162, 162, 40, 50, somewhere in there is a good area to search for potential bounces to the downside, okay? This is a fantastic area. We have multiple elements, not the trend line. The trend line, unfortunately, is nowhere near that area, okay? Please mind that the trend line is way too far above this area, so I'm just going to delete the trend line. We have the previous swing low, we have the Fibonacci retracements, and the moving averages. So again, around 162, 162.50, I know that we can find some potential short opportunities should price, first of all, retrace up to that area, and second, should price bounce down of that area. So if we see that price is bouncing or begins to bounce down of that area, we should be all over this chart, all over this trading setup, searching for short opportunities, because chances are a whole new swing should be taking off of that level, should be taking off from this level, such as in here and in here and in here, etc, etc. You know, whole new swing down, a whole new swing down. Well, why not yet another swing down? This is the optimal area for that to happen, and that's where we are gonna be waiting for price to to come up to that level. What do I usually do? I usually place a sound alarm somewhere in there, okay? So I don't have to physically be monitoring this chart 24/7. I just simply place a sound alarm there. I crank up my my speaker's volume, and I can simply walk away from my trading computer, okay? Or I can check my emails, whatever, okay? As soon as the sound alarm goes off, I know that I am to pay attention into this chart, and again begin searching for those bounces in order to trigger my entries. All right, but again, as far as this video goes, please mind how we've gone through elaborating a confluence, or by marking the confluence of different elements of support and resistance, we now know what's the optimal area to sell into this downtrend on the sterling pound against the Canadian dollar. Alright, another example, the euro against the Swiss franc daily time frame. Another nice downtrend, the trend filter indicator also calling a downtrend, so I mean, we can just take a quick look into the moving averages, and we know that everything is looking good for a downtrend, right? So, do we have any confluence in here? Well, I have no idea. Let's check it out, shall we? As usual, I like to begin with my trend lines. Let's draw some trend lines in here. I don't like the green color. Let me just color it in blue, for example. So, oh, actually, we have a beautiful trend line there. You see how we can more or less link this line, this bounce point there, another, whoops, this bounce point there, another one there, and another one there, and another one there. So beautiful trend line within this trend, okay? And obviously coming together all along the dynamic area of support and resistance. So yes, that's a valid trend line I want to keep in my chart. All right, what's next? Counter trend lines. Well, we have a swing low there and another swing low there, but obviously, well, that's not a counter trend line I can rely on because it's already broken. And anyway, price, by the time it comes up to retest the counter trend line, price should be already breaching through the 100. So that's not a counter trend line I can use. There is another counter trend line there, but again, price is above that counter trend line, so it's impossible for price to retest that counter trend line should it retrace up. Okay, so this counter trend line is not valid either on this scenario, or at least I cannot use it in any way. Let me zoom out. Well, that counter trend line is far gone. We have another counter trend line there. Do you see that? How we have that counter trend line there? But I usually don't like zooming out that much, even though this is a valid counter trend line indeed, okay? And it seems like price could bounce off that counter trend line. A general rule of the thumb when it comes to trading is, guys, don't zoom out too much in your charts. The markets don't have a large memory span, and this is a general tip as far as trading goes. Okay, it's got nothing to do with the 3 SMA system. It's actually a general tip as far as trading, no matter whatever whatever trading system you decide to follow. The markets have a short memory span, so you don't really want to zoom out that far back in time. Alright, the market has probably forgotten about these levels already. Trust me, that's my experience. You want to focus on recent swing lows as far as drawing your trend lines and counter trend lines. Okay, so I'm afraid I don't have any counter trend line to use in my advantage here. Alright, now what about will I ever say it? Fibonacci retracements. Fibonacci retracements. Well, this is the high point for the former swing. All right. And even though it's not a really harmonic price action, in fact, this pattern looks more as a breakout pattern. Do you see the staircase formation? Move down, sideways price action. Move down, sideways price action. Move down. Well, this looks like a staircase formation, but at any rate, I'm going to continue with drawing my Fibonacci's here. This is the high for the previous swing. This is the low. Assuming this is indeed the low, should we get a retracement, that would be the low. Indeed, should price keep on pushing down, well, I will just have to readjust my Fibonacci's. That's my Fibonacci retracement, and this is the area between the 61 and the 38. If I more or less project the moving averages, okay, they should, by the time we get a retracement, fall in line within that, this Fibonacci area, so to speak. So that's okay. I can indeed use these Fibonacci's and that trend line. As you can see, they come together at the same area, okay? The trend line is also within the Fibonacci area, all right? And, we have the previous swing low there. I'm gonna mark it also, maybe in red. Or pink, it doesn't matter really. I'm not gonna be able to use this level. As you can see, we are looking to find our confluence around that area, and this level down here doesn't quite belong there. Okay, as you can see, it's way below this level. The only possibility for us to take this swing low and therefore this this horizontal level into consideration is if price continues to push down. We will need to stretch our Fibonacci's, and then let's imagine price follows this type of pattern. Okay, so by the time price is in here, retraces up there, we do have the Fibonacci area, the Fibonacci band, the previous swing low, and if we project the trend line and the moving averages, okay, then yes, around this area we do have a confluence, but that's assuming price first of all pushes down somewhere in here, and then from there it begins to retrace up. As it stands right now, being this level the very low point of this current swing, I cannot, at least at this moment, take this swing low and therefore this horizontal line into the equation, in order to form a confluence. So for the time being, I'm not going to be able to take this one into consideration. So we have the Fibonacci's and the trend line and the dynamic area of support and resistance around this area. So should price come, retrace or pull back from this level, this more or less would be the ideal area, okay, as the moving averages catch up with price. This would be the ideal area to search for potential bounces to the downside, and therefore to search for our short opportunities somewhere in there, okay? Now, we are now looking into the New Zealand dollar against the Canadian dollar on the 5 minutes time frame. Now, I'm using this, I want to show you this time frame just to prove that this system can be used no matter the time frame. You can find valid trends, okay? Take a look at the trend filter there, take a look at the moving averages formation. We can find valid trends no matter the time frame. The only difference is that in this swing down, we are going to make, I don't know, let's say just 10 pips, whereas if we search for trading 10, 20 pips, something like that, okay? However, if we would find this trend on the 4 hours time frame, we would make 80 or 90 or 100 pips out of that move, okay? At any rate, the trading principles, the market principles are equally the same, and therefore we can trade them in exactly the same fashion, okay? Alright, so let's assume we are indeed very short-term traders, we are almost scalpers, and we are to search for trading opportunities on the 5 minutes time frame. Alright, so again, what type of confluence do we have on this downtrend? Meaning, what's the ideal areas to search for trading opportunities? Well, let's let's draw some trend lines. That's the beginning of the trend. I can draw a trend line somewhere in there. Even though it's been broken, okay, there, so I need to readjust it. Okay, that's our trend line. I don't like the pink color, so just give me a second. Let's mark it in blue. Alright, that's our trend line in there. What about counter trend line? No counter trend line I can really use. If I link any of these swing lows, we can see that price is, whoops, sorry about that. Price is still above, you see, above this trend line, and therefore I'm not going to be able to use it as a bounce point. Okay, remember that in order to have a bounce, this trend line, this counter trend line should fall above current market price. Okay, so we can actually get a bounce. Let me zoom out a little bit. Well, this was a valid former counter trend line, okay, but that's obviously gone. All right, that's way too current market price is somewhere in there, so we cannot use this counter trend line anymore, and that's very really, I'm afraid I'm not gonna be able to find any counter trend line or to form any confluence out of any counter trend line in this specific setup. Okay, let's now draw some Fibonacci retracements. This is the previous swing. Now this is the latest swing, so we are to mark this latest swing down here from the swing high to the swing low. Let's do just that. 38 and 61. So this is the Fibonacci area. Yeah, sure, I mean the moving averages are more or less in line there. The trend line is right now, as price retraces down, if price it is indeed to retrace down, well, we do also have the Fibonacci area around there. And what about the swing low? Well, that's the swing low there. Okay. Alright, so we have the previous swing low, or the extension of the swing low, also within the Fibonacci area, very near the 38, but still within that area, so that's okay. If we prolong the trend line, they come together around that point. More or less, if we prolong or we extend the dynamic area of support and resistance, it also comes around that area. So somewhere in this area here, okay, somewhere in that area, that's a fantastic level to to see potential bounces. Let's imagine price retraces up from this current market price right now 0.7239. So if from this point price retraces up and I see a bounce of that area, that's a rather optimal area to get a bounce, and therefore to search for my short opportunities, because we have multiple levels. Okay, the dynamic area, we have a trend line somewhere in there as well, we have the previous swing low, all that happens within Fibonacci territory, and again, obviously the moving averages themselves. So again, within this area here, okay, we have multiple elements of support and resistance coming together, so any bounce point of that area is going to be an ideal location to click on our sell button. Again, should we get a bounce, if price upon retracing simply breaches above, well, you know what to do. You simply take no trade. But if we do get a bounce, again, fantastic area to click on our sell buttons. Okay? Anyway, I'm afraid this video is already running too long, so it's time to wrap it up. And, well, at any rate, I believe I've covered, well, pretty much everything I had to say as far as combining these individual elements of support and resistance in order to form confluences. Okay, confluences around the dynamic area. Those are the best possible bounce points you can search for in order to trigger trades off those bounces. Okay, again, as long as you have one or two of these elements within the dynamic or around the dynamic area of support and resistance, those are ideal locations to search for bounces. And indeed, if you get the bounce, be all over that chart, guys. Be all over that trading setup, because chances are you are gonna see a nice move in the direction of the moving averages in the very upcoming future. Okay, and hopefully you will be able to profit from that upcoming swing. Alright, folks, that's all for this video. Cheers, bye bye.